Hey guys, welcome to this video. A bit of a different one today. It's the US dollar versus the Indian rupee. I've seen lots of posts about this all over the place, and I suppose it is quite interesting because what you do have on the data from TradingView is a move from 1973 to 1981, then this explosion in value like this, all the way up to where we are now. And that is at 83 Indian rupees per dollar. So clearly you can see it's going up and up and up, and it's really not stopping. The biggest retracement you actually had, okay, was more or less at this point. All right, so if you look actually at where you'd come up all the way to here, 49, and you've gone 23.6% of the way back. And then once you get up to this point, you don't quite come as far back. So really, in that period of time, the biggest retracement you've had is 23.6. And actually, the only red candle you've had since 2011 came in the year of 2017. So the reason why this is happening, if you look at the news for India, they're outgrowing the US in many ways. A lot of people expect India to be the second largest economy under China and above the US. And this growth and growth and growth in the value of the dollar against the Indian rupee. If you look at the RBI, okay, the Reserve Bank of India, you'll find that they are very keen on this continuing. Okay, they export a lot of goods, and that ties in well for them. As a trader, I would say this probably won't last forever. I'm not expecting that to happen. You can see after a certain period of time, you always get a red candle back. You haven't had a red candle since 2017, so I would say that ultimately it's still a short, and you'll probably get it short. Anything this steep will come down, albeit it may be slightly. There's a lot of other things you can trade really, but if you're looking to short this, I'll just be very careful with very light sizes. If you've got an asset that's come up for literally 40 plus years, you've really got to be careful when you do pick the end of that happening. And if you're trying to gauge market value or good areas to get short, it's best done in very much smaller sizes. If you trade too large because you're looking for this massive swing trade and a complete drop in the value of the Indian rupee, drop in the value of the dollar against the Indian rupee, of course, that would grow the value of the Indian rupee. Then if you're anticipating that, you don't quite know when it's going to be. So it's best to trade in low sizes if you're looking for that to occur. You can see there's minor support fairly early on, just here where I've drawn this red arrow. That's probably going to be the first base for a fall. You did fall slightly to about 80.94. Okay. Really what we're looking for is a drift back further nearer 77. That's not going to be an awfully big retracement, and it's not an awfully big ask, considering you've gone up from 39 all the way to 83 with just one candle, or more or less 44 to almost 100% as a double with one red candle. It's got to come down eventually. It just can't last. Thanks for watching, guys. Hope that helps. See you in the next one.